10 assets that rich people own but never talk about. Have you ever wondered why some people seem to build wealth effortlessly while others work twice as hard but never get ahead? The answer might not be what you think, and it certainly isn't what most financial advisors will tell you. Here's a shocking statistic. According to a recent study, 67% of millionaires own assets that they rarely, if ever, mention in public. Their visible possessions, the luxury cars, vacation homes, and designer clothes, often represent the smallest portion of their actual wealth. The uncomfortable truth is that true wealth rarely comes from what most people chase. While average Americans focus on buying status symbols that depreciate, the genuinely wealthy quietly accumulate assets that generate consistent income and appreciate over time. In today's video, I'll reveal 10 hidden assets that wealthy individuals prioritize but seldom discuss publicly. These aren't flashy investments that make for interesting cocktail party conversation. They're the quiet wealth builders that create lasting financial freedom. Stay until the end for the most powerful asset of all, one that the ultra-wealthy consistently rank as more valuable than anything money can buy. Yet ironically, most people sacrifice in their pursuit of wealth. Let me reveal the first asset that truly wealthy people own but rarely discuss publicly. Something far more valuable than the luxury cars and vacation homes that often serve as public symbols of success. Passive cash flow from commercial real estate. While the average person dreams of a bigger home with more impressive features, the truly wealthy are quietly acquiring properties that generate consistent monthly income. It's not about the real estate you live in. It's about the real estate that pays you to own it. Here's a truth most financial advisors won't tell you. Many of America's wealthiest individuals built their fortunes not through high-profile investments, but through unglamorous commercial properties like storage facilities, car washes, small apartment buildings, and strip malls. These assets lack the prestige of luxury homes, but consistently deliver what matters most: reliable monthly cash flow regardless of stock market fluctuations. Consider Charles, who inherited $300,000 from his father at age 47. Rather than upgrading his lifestyle, he purchased a 12-unit apartment building in a middle-class neighborhood. That single decision, which most of his friends considered boring, now generates over $14,000 monthly in passive income, more than enough to fund his retirement. While the property itself has more than doubled in value, the beauty of commercial real estate isn't just the income, it's the tax advantages. Through depreciation and other write-offs, many real estate investors significantly reduce their tax burden while building equity, as tenants essentially pay off their mortgages. Unlike residential properties, commercial real estate is valued primarily on its income potential, giving owners more control over property's worth through improved management. You don't need millions to start. Today's investors can begin with real estate investment trust REITs that trade like stocks but represent partial ownership in income-producing properties. Platforms like Fundrise or Realty Mogul allow investments starting at just $1,000. As your knowledge and capital grow, you might consider real estate syndications that pool resources from multiple investors to purchase larger commercial properties. This focus on income-generating assets rather than status symbols connects perfectly to the second hidden asset of the truly wealthy, one that offers even greater returns but requires looking beyond traditional investment markets: private equity in small businesses. When you think of private equity, you might imagine billion-dollar deals involving major corporations. But there's another private equity market that operates almost entirely outside public awareness: investments in local, privately held businesses that drive the American economy. The surprising reality is that many millionaires have built substantial wealth by acquiring ownership stakes in unsexy, established small businesses with predictable cash flow. While everyone else debates which tech stocks might be the next Apple, the quietly wealthy are purchasing partial or complete ownership in local service businesses, manufacturing companies, and distribution operations. Consider Elizabeth, a former executive who invested $150,000 for a 25% stake in a commercial cleaning company. The business wasn't exciting or innovative, just profitable and well-established with long-term contracts. Within 5 years, her annual dividend payments exceeded her initial investment, and she has since repeated the strategy with 4 additional businesses, creating a 7-figure portfolio generating substantial passive income. What makes these investments particularly valuable is their independence from public markets. When stocks crashed during the 2008 financial crisis, and again during the pandemic, many of these privately owned businesses continued generating stable profits for their investors. The lack of correlation with traditional markets provides diversification that public stock portfolios simply cannot match. Smaller investors can now access this previously exclusive asset class through platforms like Mainvest, which allows investments in small businesses starting at $100. For those with more capital, business brokers can identify established local businesses seeking investors or buyers. The key is focusing on companies with proven profitability rather than speculative startups. The wealthy prefer cash flow over promises of future growth. While these physical assets generate tangible returns, our third wealth-building asset is completely invisible, yet potentially more valuable than any property or business. High-value relationships. Your network is your net worth isn't just a clever saying. It's a fundamental principle that the wealthy understand and actively cultivate. The truly successful invest as much time developing strategic relationships as they do analyzing financial statements. The unspoken truth is that many of the most profitable opportunities never reach public markets or job boards. They're shared within closed networks of trusted connections, private investment deals, off-market real estate, executive positions, and business partnerships that create enormous value but remain invisible to outsiders. A single relationship with the right person can generate more wealth than decades of traditional saving and investing. Michael, a successful real estate investor, attributes over 80% of his most profitable deals to his relationship network. One connection with a retiring business owner led to purchasing a commercial property at 30% below market value because the seller prioritized a quick, hassle-free transaction with someone they trusted over maximizing price through a lengthy public listing process. Unlike physical assets that depreciate, relationship capital tends to compound over time. The wealthy approach relationship building strategically, not through transactional networking, but by creating genuine value for others first. They focus on quality over quantity, understanding that 5 deep connections with accomplished individuals often prove more valuable than 500 superficial LinkedIn contacts. The practical approach to building this asset begins with intentionality. Identify 10 to 15 people whose knowledge, connections, or influence could genuinely help you achieve your goals. Then systematically find ways to add value to their lives before requesting anything in return. This might mean making introductions, sharing useful information, or offering your own expertise. The goal is an immediate payoff, but building long-term relationships based on mutual benefit. Have you ever received a significant opportunity through a professional relationship? Type network wealth in the comments if you believe in the power of strategic relationships. Now, let's explore our fourth hidden asset, one that creates income whether you're working or sleeping: intellectual property and royalties. While most Americans focus entirely on trading their time for money, the financially sophisticated understand a powerful alternative: creating something once that generates income indefinitely. This create once, earn forever approach represents one of the most overlooked wealth-building strategies available. The wealth-creating reality is that intellectual property, copyrights, patents, trademarks, and content can generate income for decades with minimal ongoing effort. Unlike traditional assets that require maintenance or management, properly structured intellectual property can deliver passive royalties long after the initial creation work is complete. This creates a separation between effort and income that's nearly impossible with conventional employment. Consider Richard, a mid-level corporate manager who spent evenings writing a specialized industry guide. The first year, his self-published book generated just $7,500, hardly life-changing. But over the following decade, that single project had produced over $380,000 in cumulative royalties through various formats, ebook, audiobook, course materials, while requiring only occasional updates. Meanwhile, his corporate colleagues who dismissed his side project continued exchanging hours for dollars without building any income-producing assets. While writing books might not appeal to everyone, intellectual property comes in countless forms. Photography sold through stock agencies, music licensed for commercial use, specialized software, online courses, apps, podcasts with sponsorships, or branded products manufactured by others. The common thread is creating something with lasting value that doesn't require your ongoing presence to generate income. The strategic approach begins with leveraging your existing knowledge. What specialized expertise do you possess that others would pay to access? What problems could you solve once in a format that helps many people? Start small, creating a detailed guide or course addressing a specific problem you're qualified to solve. Then expand based on marketplace feedback. Focus on evergreen topics with long-term relevance rather than trending subjects that quickly become outdated. This invisible income stream connects naturally to our fifth wealth-creating asset, one that the financial industry works hard to keep exclusive: premium credit cards and private banking privileges. When most Americans think about credit cards, they focus on interest rates or basic rewards. But there's an entirely different level of financial product available to the affluent that goes far beyond points or purchases: a world of concierge services, exclusive experiences, and wealth-building opportunities. The little discussed truth is that high net worth banking relationships provide benefits worth thousands annually that extend far beyond basic banking services. These aren't just status symbols, but genuine financial assets that deliver measurable value through preferential treatment, reduced costs, and access to opportunities unavailable to the general public. Consider Jeffrey, who initially scoffed at his private banker's suggestion to upgrade to a premium card with a $550 annual fee. After reluctantly trying for a year, he calculated over $4,700 in value received, including airport lounge access, hotel upgrades, travel credits, enhanced purchase protection, and concierge services that save in countless hours. More importantly, the relationship opened doors to specialized investment opportunities previously unavailable to him. The benefits extend beyond conveniences into genuine financial advantages. Premium banking clients often receive preferential loan terms, higher deposit rates, dedicated advisory teams, and reduced or waived fees. During economic uncertainty, these relationships become even more valuable. Private clients frequently receive priority service and flexibility unavailable to regular customers. While the most exclusive services require substantial assets, many entry-level premium products offer surprising value even for those still building wealth. Cards like Chase Sapphire Reserve, American Express Platinum, or Citi Prestige deliver benefits exceeding their annual fees for those who use them strategically. The key is calculating actual value received rather than focusing solely on the cost, a principle the wealthy apply to all financial decisions. This privileged access extends beyond banking into our sixth hidden asset, one that can generate extraordinary returns before the general public even knows an opportunity exists: early access and pre-IPO investments. Have you ever wondered how some investors seem to get in on the ground floor of successful companies, while you only hear about investment opportunities after the biggest gains have already happened? This isn't just luck. It's a result of having access to private deal flow that most Americans never see. The stark reality is that many of the most lucrative investment opportunities never reach the public markets until the majority of the value has already been captured by early investors. Before companies like Uber, Airbnb, or Facebook became household names available on stock exchanges, private investors had already multiplied their money many times over through early-stage investments at valuations that would seem unbelievable in retrospect. Take Michael, who invested $50,000 in a friend's software startup through a series of funding round. When the company went public 7 years later, his stake was worth over $1.2 million. Similar examples exist in real estate, where connected investors access off-market properties before they're listed, or in private equity deals that never make headlines but generate substantial returns. Traditionally, these opportunities were limited to the ultra-wealthy or well-connected. However, recent regulatory changes in technology platforms have created new pathways for ordinary investors. Equity crowdfunding platforms like Republic, Start Engine, and WeFunder now allow investments in private companies with as little as $100. Real estate crowdfunding platforms provide access to commercial properties previously available only to institutions or high net worth individuals. The approach requires careful research. Early stage investments carry higher risk alongside their potential rewards. Focus initially on areas where you have knowledge or expertise, allowing you to better evaluate opportunities. Start with smaller allocations across multiple investments, understanding that some may fail while others might deliver exceptional returns. Have you ever invested in a startup or early stage business? Type early investor in the comments if you're interested in exploring this asset class. This early access to private investments naturally connects to our seventh hidden asset, one that operates almost entirely outside public awareness, yet manages trillions of dollars. Specialized investment funds and LP positions. While ordinary investors debate which mutual funds to select in their 401(k)s, the truly wealthy access investment vehicles most people don't even know exist. Limited partnerships, specialized investment funds, and private placements that operate with minimal publicity but often deliver superior returns. The financial reality most Americans never discover is that many of the most successful investment managers don't offer their services to the general public. They operate exclusive funds with high minimum investments, often $250,000 to several $1 million, focusing on specialized strategies or asset classes. These aren't heavily advertised because they don't need to be. Their performance attracts all the capital they wish to manage through referrals and reputation. Consider Thomas, who redirected $500,000 from traditional investments into a specialized fund focusing on distressed commercial real estate debt. While his friend's conventional portfolio struggled to match index returns, his investment generated 17% annually over 5 years with remarkably low correlation to public markets. The fund manager never advertised and accepted only investors through existing client referrals. These exclusive investment vehicles often employ strategies unavailable in retail investment products, direct lending to businesses, specialized real estate niches, insurance-linked securities, or sophisticated arbitrage approaches. Their limited size allows them to pursue opportunities too small for major institutions, but potentially more profitable than broadly available investments. While the highest minimum options remain exclusive, several pathways now exist for accessing similar strategies with more modest capital. Platforms like Yield Street, Moonfair, and iCapital Network have reduced minimums for alternative investments to $10,000 to $25,000. Certain brokerages now offer interval funds that employ strategies previously available only to institutions. The key is developing relationships with financial professionals connected to this private investment ecosystem. This specialized approach to investing naturally relates to our eighth hidden asset, one that pays dividends across all areas of wealth creation: premium legal and financial counsel. While most Americans rely on mass market financial advice or software-generated legal documents, the truly wealthy invest in something far more valuable: specialized expertise from elite professionals who provide personalized strategies for wealth preservation, tax minimization, and asset protection. The consequential truth is that cookie-cutter financial and legal advice costs far more in missed opportunities than in actual fees. Generic strategies simply cannot optimize for the complexities of significant wealth. The difference between standard guidance and sophisticated counsel can literally amount to millions over a lifetime through superior tax strategies, asset protection, investment access, and estate planning approaches. Consider Catherine, who initially balked at paying $8,500 for a comprehensive tax strategy from a specialized accounting firm. The personalized plan they developed legitimately reduced her tax burden by over $43,000 in the very first year through strategies she had never encountered through standard tax preparation services. Over the following decade, these approaches saved her family over $380,000 while simultaneously providing superior asset protection. This elite counsel isn't just about minimizing taxes. It encompasses investment structure, business strategies, estate planning, risk management, and philanthropic planning integrated into a cohesive approach. While individual financial decisions might seem sound in isolation, their interactions often create unexpected consequences that only specialized expertise can identify and optimize. The strategic approach doesn't require being ultra wealthy. Begin by upgrading from mass market services to professionals who specialize in clients at your current wealth level but can grow with you. Instead of selecting advisors primarily on cost, evaluate their expertise, client profile, and professional network. Even if the upfront investment seems substantial, the long-term value often proves transformative compared to standardized guidance. This emphasis on specialized knowledge extends beyond advisors to our ninth hidden asset, one that creates value regardless of market conditions. Specialized knowledge and skills. While most people focus entirely on financial assets, the wealthy recognize that specialized knowledge often generates higher returns than any traditional investment. They systematically acquire expertise that creates disproportionate value, understanding that the right knowledge can generate income regardless of economic conditions. The transformative reality is that specialized expertise functions as an appreciating asset with virtually unlimited upside. Unlike physical possessions or even financial investments, valuable knowledge typically increases in worth over time through application and expansion. It can't be taken away, requires no storage costs, and often becomes more valuable during economic uncertainty when others seek solutions to emerging problems. Take Robert, a mid-career professional who invested 2 years and $35,000 developing specialized expertise in restructuring distressed manufacturing operations. This knowledge initially boosted his corporate salary by 40%, but its real value emerged when economic challenges hit his industry, while others faced layoffs and uncertainty. His specialized skills commanded premium consulting rates exceeding $300,000 annually, helping companies navigate precisely the problems he had studied. The wealthy approached knowledge acquisition strategically, focusing on developing knowledge monopolies, unique combinations of skills and information that few others possess. They recognize that where knowledge supply is limited but demand is high, compensation increases accordingly. Rather than pursuing credentials alone, they seek expertise that solves expensive problems for those willing to pay premium prices for solutions. The practical approach begins with identifying high-value knowledge intersections, areas where multiple valuable skills or information domains overlap, creating expertise that's both rare and valuable. Instead of becoming merely competent in a popular field, develop mastery at the intersection of multiple disciplines. Technical knowledge combined with communication skills, industry expertise paired with data analysis, or specialized knowledge applied to emerging markets. What knowledge or skills are you currently developing? Type knowledge investment in the comments if you believe specialized expertise is key to financial success. Our final hidden asset might surprise you. It's something many chase through financial success, but often sacrifice in its pursuit: time and freedom of choice. While the visible trappings of wealth get all the attention, the homes, cars, and vacations, the truly wealthy understand that genuine affluence is ultimately about something far more valuable: owning your time and having the freedom to choose how you live each day. The profound truth that many discover too late is that time is the ultimate non-renewable resource. Unlike money, lost time cannot be replaced, invested, or multiplied. Real wealth isn't measured primarily by financial statements, but by the control you maintain over your own life. The ability to spend your days according to your values and priorities rather than external demands or financial necessity. Consider James, who appeared conventionally successful as a senior executive earning over $400,000 annually. Yet he controlled almost none of his time, constantly responding to others' demands, traveling on exhausting schedules determined by corporate needs, missing family events, and sacrificing health for career advancement. Meanwhile, his neighbor Michael earned significantly less but had structured his work and investments to maintain complete schedule autonomy, abundant family time, and the freedom to decline opportunities that didn't align with his priorities. The affluent increasingly measure wealth by this freedom metric. How many days each month are entirely self-directed? How much life energy must be exchanged for financial obligations? Can opportunities or requests be evaluated based on personal meaning rather than economic necessity? These questions reveal more about true prosperity than any financial statement. The practical path begins with a critical mindset shift. Viewing time as your most precious resource and structuring financial decisions accordingly. This might mean choosing a less prestigious but more flexible career, building businesses that don't require your daily presence, or prioritizing investments that generate passive income over those requiring active management. The goal isn't necessarily early retirement, but rather achieving financial independence, the point where work becomes optional rather than mandatory. As you build your financial strategy, regularly ask, is this bringing me closer to time affluence or just money affluence? The wealthiest people understand that the ultimate luxury isn't what money can buy. It's what it can free you from. We've now explored 10 powerful assets that the truly wealthy prioritize but rarely discuss. passive cash flow from commercial real estate, private equity and small businesses, high-value relationships, intellectual property and royalties, premium banking privileges, early investment access, specialized investment funds, elite professional counsel, specialized knowledge, and perhaps most importantly, time and freedom of choice. Notice something significant about these assets? None of them are designed to impress others. They don't sit in your driveway or hang in your closet. Instead, they quietly build wealth, create opportunities, and ultimately provide the freedom that genuine prosperity brings. This week, I challenge you to examine your own financial priorities. Which of these hidden assets could you begin building, even on a small scale? Perhaps it's acquiring your first income-producing property, developing a valuable skill, or restructuring your investments for more passive income. Remember, every financial empire began with a single decision to prioritize substance over appearance. Leave a comment saying true wealth if you discover an asset from this list that you're committed to building. Your insight might inspire others who are just beginning their journey toward genuine financial independence. In our next video, I'll share specific strategies for building each of these assets, including how to start with limited capital and gradually expand your holdings as your wealth grows. Remember, true prosperity isn't about what you display. It's about what you control. While others chase the illusion of wealth through status symbols and lifestyle inflation, those who achieve lasting financial freedom focus on assets that appreciate, generate income, and ultimately provide the most precious resource of all, the freedom to live life on your own terms.